You were playing a really like tense, kind of like From Dusk Till Dawn or something.
I like movie music, and that was a song from Star Trek Into Darkness.
That was Star Trek?
It was actually Star Trek, believe it or not. Yeah.
Easy enough. Guys, it's after 5 o'clock. It's time for After Hours Real Estate. Chris Peshek, broker, associate at Peshek Properties, here with my good buddy Stephen Babcock, who's a guitar extraordinaire. And
I also do mortgages, by the way. Yeah.
and I'm getting there. And he loves backlighting and doing mortgages. So
yeah, I thought this would be cool because you get a view, like the Lago view, right? This view for everybody who's not
nice. That's
familiar.
You do have a nice view.
But then I forgot about the lighting, and it's kind of too late now. So you just get a washed out me, unfortunately.
Well, let's say here, I'll turn around and give you the Dripping Springs view. There you go.
If anyone's jealous, you can just move to Texas. We can help you out here. It'd be easy to do.
Funny you should say that. Hey, Shelly, I've got a YouTube video hitting tomorrow. It's pros and cons of Wimberley with one of my Wimberley clients, and she and another guy in the video both refer, and without prompting, both refer to Wimberley as magical. And it kind of is. If you've ever been there.
That's how I feel about Lago, man. You get out into the hill country, and it's, I mean, oh my God. My God. And then really, the community out here, it's just unreal. It's unreal. I'm from up north, and I remember getting down here. I probably can't even tell this story because it's so inappropriate, but I got down here, and I remember after like 3 or 4 men had purchased drinks for me at the bar when my wife and I went out, and her too. I remember looking at her thinking, like, what's going on down here, right? Like, am I dressing in a way that makes me look like I'm fishing right now? And finally some guy down the bar was like, y'all aren't from Texas, are you? Like it's nice here. Like, we're just nice, It really threw me off when I got down here. It's nice.
We found out you're from out of the area, and we decided we're going to buy you a drink.
Actually, what's funny? Within 2 weeks of being here, I met a restaurant, and I was looking at a menu, and I said, well, what is it, chicken or steak? Right? Because I see a chicken fried steak, and I have no idea what I'm looking at, right? And this guy from down the bar goes, y'all aren't from Texas, are you? Right? And we're like, oh, no, we just moved here. And he's like, oh, are you just visiting? We said, no, we moved here. We moved. He's like, oh, damn Yankees then. No, he was like, oh, he basically called us Yankees and then damn Yankees when we moved here. It was funny, man. It was, we got to welcome real fast.
I guess I should give an introduction into what we're doing before we dive into this. Guys, I'm a real estate broker, and Steve is a mortgage broker. And so we talk about Austin real estate market. We talk about mortgages. We talk about the general state of the U.S. economy and the real estate market overall, and kind of globally too, a little bit of commercial real estate. So we kind of get into everything on this show. We do it every Monday. But we also, since it's after 5, we typically have a little adult beverage with us. So my man, still on the Heineken kick?
Still on the Heineken kick.
Oh, no, yes, but in a can now. In a can. All right. I have a confession to make. Because I was running late today trying to make up for lost time, and I'm in my new office that doesn't have a ceiling yet. I'm still drinking water. Sorry. But cheers anyway. The back of my Jeep there. Cheers.
I'll drink alone. That's cool. It's mature. It's nice. It's fine.
No, you're not alone. You've got people here.
I'm just kidding, man.
I was. Somebody told me the difference between a Yankee and a damn Yankee, and this goes a lot with some of my my pros and cons of Dripping Springs video, which has not been released yet either. Basically, a Yankee is somebody who, is north of the Mason-Dixon line and moves down to Texas. Oh yeah, this is from my buddy Joe Hogue, who owns 12 Fox. It was his grandfather-in-law. And a damn Yankee is the same person, but who moves here and stays here.
Yeah.
So you are a damn Yankee.
I am a damn Yankee then.
Man,
sorry, drinking up all your water.
There's some stuff going on. I want to kick off with what I typically do. I want to look at the Bastrop real estate market real quick. And then what we're going to talk about, guys, I'm getting a lot of questions about all this new NAR settlement and everything like that. So we're going to dive deep into that. I'm going to pose some questions to Steve about the state of the mortgage industry too, because I had a conversation with a client today that's interesting. So we're going to dive into a little bit of the state of the mortgage industry. And I don't know, Steve will probably talk a little bit about CPI and numbers like that came out, since those are things that are relevant. Does that sound like a pretty good order to you?
Let's do it.
All right. I'll share this Bastrop. Y'all know how I do this, guys. I do these updates every month, and I do city of Austin and I do the major suburbs around Austin. So if you're not on my YouTube channel, it might be worth you going to my YouTube channel. It's Live in Dripping Spring, or no, sorry, Live in Austin TX is my YouTube channel. But I do these every month, and they're really interesting and eye-opening. And there's a couple of things on here that caught me off guard. So active listings, we talked about it last week, Steve. Active listings are up 13% here. Move-in ready homes. This is one of the ones that caught me off guard. 132 versus 105. And if you look at that, that is almost the entire increase in active listings in Bastrop is existing homes, is resales. And Bastrop's one of those markets that has a lot of new home construction. So that caught me off guard for one. Under contract dropped in the last 30 days from the previous 30 days. Steve, you want to take a wild ass guess at why that is?
Oh, the rates went back up.
When rates spike 0.75% in a week's time, you tend to have fewer contracts. But
also what's not said is that a lot of people stopped being able to, or not. How do I say this? People who were qualified suddenly weren't when the rates were higher.
Those buyers just went away because all of a sudden, a 0.75 percentage point, you're losing, I think 8 or 9% of your buying power. And actually probably closer to 10 with rates where they are. So if you're looking at a $500,000 house, now all of a sudden you're looking at 450. They're not the same house in most markets.
Right.
So people just said, the heck with it, I'm done. So yeah, we've got fewer under contracts now. Average days on market though is continuing to come down, and that's significant right there, 15%. I think that we had quite a few new construction homes that went under contract and sold, because that's a big move this month. And then average sales price is still creeping up slowly, kind of like we said we expected. And we had a lot closed in the last 30 days, and that's that February time frame that hit the closing table. Those were the people that locked in their rates before the interest rate hike. So that's why you're seeing such a big jump there. Anything else in there that's standing out to you, Steve?
No.
Yeah, just kind of what it is, right?
I mean, the rates went up, and now they're at the all-time high for the year right now, and they're just hovering there.
Yeah,
But if you remember a few months ago, we were talking about rate cuts in March.
Yeah. Oh yeah. Now we're less than
a
chance of rate cuts in June.
I mean, there's even talk about rate hikes, right? If the inflation had been 0.5 instead of 0.4 that came out just recently, we'd be doing a rate hike. So, all right, well, it was 0.4. So what's it going to be next month, right? We'll see. We'll see where that goes. I don't want to be doom and gloom, so I'll just stop while I'm ahead. There you go.
Yeah, you did. So man, let's talk about this. The 6% commissions are going away. Oh my God, the CNN article, right? We always talk about articles. The CNN article, brutal on the titling. So just so you know, guys, first of all, there's been no settlement at this point. There's a proposed settlement.
I got it. Okay.
Yeah, there's a proposed settlement, and it has to go through, like everybody has to agree. T's have to be crossed, I's have to be dotted. And I know that's kind of nitpicky, but again, it's a proposed settlement. Like this could change significantly. CNN article, the headline, 6% commissions are going away or whatever. Yeah, not really. First of all, 6% commissions are not standard, just so you know. There are no standard commissions in real estate. That's kind of one of the things that shocked me about all of this hubbub about the lawsuit and stuff, right? So first of all, there are no 6% commission standard in real estate.
You know, I'm not going to say her name, but I worked with an agent one time, my very first year in lending, who got her clients under contract, got to the closing table, and was shocked to discover that the buyer's agent was offered 0% and the listing agent was offered 3%. And it was right there on the contract that she never again ever failed to look at.
Yeah.
But she worked completely for free. And if that doesn't prove that 6% is not set in stone, then you know, nothing does, right?
That's right. That is right. But here, man, I'll touch on a few high level things on this. First of all, guys, the whole point, not the point, the reason for this lawsuit is in some states, and the state of Missouri is one, and that's where this big lawsuit came down, right? They don't really have a spot on a listing agreement, which if I'm going to sell a house, myself and the seller have to have a listing agreement where we spell out the terms of the listing, right? Well, in a Texas listing agreement, you talk about the amount of revenue that's going to be paid by the seller for selling the house. It can be a percentage, it can be a flat rate. You know, it can be, I've seen it as high as 7.5%, and I've seen it as low as 4.5%. So that's kind of what we do in Texas. And then a little bit further down that contract, you talk about how much of that you're going to share with a buyer's brokerage. There have been deals when the buyer's broker has made more than the listing broker. There's been deals when the buyer's broker has made less, like Steve was just saying. But the thing is, in Texas and in quite a few other states, but not all, those numbers are negotiable and they're on the contract and they're written in. Our contracts are you know, they're fill in the blank, basically. They're written by attorneys because realtors aren't attorneys. But they're written by attorneys, and we fill them in and we talk through the fill in the blank part with the sellers. States like Missouri, they don't have that, and that's the whole reason for this this lawsuit. From what I've gained, because the sellers were pissed because they didn't know that they were sharing money with the buyer's agent, and buyer's agents were pissed because they thought that the buyer's agent was negotiating against them in order to make more money, because nobody knew who was getting paid, how they were getting paid, or anything like that. So that's where this lawsuit came from. In Texas, not the case, and very little is going to change in the state of Texas as a result of this. Now, are you going to have some sellers that choose not to pay a buyer's agent? Sure, you're going to have that. Like Steve just said, that's been around forever. There have been sellers that I've had that did not want to pay a buyer's agent, or wanted to, or you know, were okay with paying them less. That's not changing. What were you going to say?
I think if I were to put on my prediction cap and look forward, I think this will embolden companies to self-help people through the process.
Yep.
And I can foresee a lead fin or something of the sense, right? That guides you through the process every step of the way to fill out your own contract, to make an offer for someone's, you know, here's an auto populate. You just give us a couple, you know, piece of information. And if you run into trouble, you can hire one of our agents for a flat fee of $1,000. Just call this phone number. Otherwise, you can do it yourself and save yourself 3%. Right.
And that's been around for at least as long as I've been in real estate. There's nothing new about that.
It's never really picked up, but also you had other states where you couldn't.
That's kind of my point, though, because for sale by owner and being able to list your own property on Zillow and all that other stuff has been around, as have flat rate listing brokerages. They have been around. They have never really, like Steve said, they've never really taken off for whatever reason. Could this be the reason behind them suddenly gaining more popularity? Possibly. Possibly. Maybe. Well, let me go through kind of what is going to change if this settlement goes through. So far as I understand it, and there's more stuff that's coming out a little bit. We're getting updates from our realtor associations and stuff like that. So, first of all, none of this stuff is set to change until July, after the midpoint in the year. So that's the first thing. We have sellers are going to have three options. Okay, and again, this has kind of been the case, except for one option's a little bit new. So one is, Mr. Seller, Steve, you can hire me. Would you like to offer a compensation to a buyer's agent that will bring us a ready, willing, and able buyer and help us sell your property? Normally, the answer is going to be, sure, I'll do that. So then the question is, how are we going to compensate them? Okay. The first way is we still do a brokerage split like we've done since I've been in the business for 13 or 14 years now. That doesn't change. The second way to compensate them is by offering this is kind of that flat rate part. Okay, we'll offer a closing concession to the buyer in order to pay for their agent. We're willing to give you a $5,000 closing concession to pay for a real estate agent. Don't know exactly how that works yet. The contracts are probably going to have to change because we cannot write that into a contract because broker compensation, agent compensation is not a part of our contracts in Texas. So I'm not sure how that's going to happen. The third thing is, no, we're not going to pay a buyer's agent. That's it.
Right. Let the buyers pay for their agent.
Have to pay for their own agent. Correct.
In which case, I think most buyers would choose to start online, trying to do it themselves.
So, and we'll get to my thoughts on that, but I think you're right. I really think you're right. So those are really the three options that sellers are going to have. The biggest change is going to be, and this floors me, man. The biggest change is going to be, until this point, the agreement of brokerages and the compensation that was going to be shared between brokerages was posted in the MLS for other brokers, not for the general public. Actually, the last couple of years, that shifted. The compensation was actually made public. But now moving forward, we are not allowed to share the broker compensation at all, starting in July if this goes through. And it kind of floors me because that was one of the main reasons behind the MLS. Like, that's
weird me out.
Is to say, hey, look, my seller is offering you 2% to bring us a buyer, 3% to bring us a buyer, 4% to bring us a buyer. If it's been, like the last couple of years, I've seen up to 4% for buyers. Okay. That's going away in July if this goes.
How does that work? Right? Excuse me, sir. It looks like there's a problem in the nation where there's not enough transparency. Do we have that problem here? No, we don't. Over here, we're great. Okay, well, all right, Johnson, let's start a cover-up, right? It doesn't make any sense whatsoever.
No, not at all. Not at all. Like, I don't get that at all. But anyway,
I'll tell you, there's lots of other rules changing. There's another one. I don't think you and I have ever done a deal like this before, but where you have a buyer that essentially is like a trust fund baby. Let's say they've got like $2 million in their bank account, but they don't have a job and they're 25 years old. I've dealt with a couple of people like that. Okay, well, you have no income. So your debt to income ratio is not doing well, right? So what we do is we just put all that money into a trust and have the trust start paying you, and boom, voila. We can use that income. Now there's some caveats to it. You got to have so much in there. You have to receive the first payment. Okay, all that's changed now. All of it's changed. Not
as a result of this legislation. I mean, of this lawsuit.
No, but the year in general has a lot of changes. Okay. You really can't do it anymore. You can if the trust's been around for 12 months. So that immediately stops the quick fixes. You can't be the grantor of your own trust anymore. Well, you can, but you can't in this case. So
real estate with it. Okay.
Yeah, a lot of those things have changed. There's a few other things that have changed in lending that would absolutely throw me off if I had not been up to date on them. But I feel like this is going to be a big year. I don't know. Let's see the big changes.
That's regardless. And The other thing that's changing in my world, so this is going to change how I do business a little, and it shouldn't, but looking back over my career, I do a lot of deals with buyers, and because I know them, because they're acquaintances, they're warm referrals. I don't have everybody sign buyer's rep agreements. I should, I just don't. Moving forward, it's a non-negotiable because, like you said, somebody that is offering 0%, I'm sorry, Mr. Buyer, my time is valuable, my expertise is valuable, and all of this is valuable. If the seller's not going to pay me, then you're going to pay me. And that's the buyer's rep agreement. That's what that spells out. It spells out how I get paid. What is my compensation? And so that's a negotiation between an agent and a buyer. So that part is definitely going to change for me. And I'd be willing to believe that that's going to kind of change across the industry, because I know a lot of people that operate like I do, especially with buyers that they know and stuff like that. Unfortunately, that is something that is going to change moving forward.
I mean, you go to $1 million house, that could take you from roughly, actually, that's not true because you couldn't go that high in the room. But I'm thinking, man, you could go from somewhere around 48 all the way up to maybe 70,000 in a difference. I mean, depending on closing costs and all that. But I mean, you could easily add that kind of cost. I was going to say 60 to 90 on $1 million home, but you can't do 3% down on $1 million home. My Lord, that would add a lot to the buyer's plate. So then the buyer gets this option. Okay, well, so I get to go from, let's just say 60 to 90,000, or I could do it myself and save $30,000. What do we do? So they're not going to do it themselves. So then what they're going to do is they're going to try to do it themselves, find some other service that offers, a $2,000 flat fee. Right. And that I think is going to be the danger on the buyer side. I've heard a lot of lenders, even today. Oh, I guess this just happened. But I've heard a lot of lenders talking about no longer chasing buyer's agents down, trying to find listing agents.
Yeah. No, 100%. And so that's where I was going to go in all of this. And what's going to happen is the people who are going to end up being harmed are the same people that we have always tried to protect in this entire process, which is the buyer.
Right.
Because now buyers are either going to be unrepresented or they're going to be severely underrepresented.
Well, I mean, essentially what it does is it raises the cost for buying a home substantially, because your first-time home buyer does not own a house. So they don't have the equity built up in the house to give away, to fund, moving to another house. And so they're going to have to come up with even more of their own money. So I always laugh at people who think you have to put 20% down. Oh, I can't afford a house. I don't have 20% down. Dude, you don't need 20%. You need 3%, maybe 3.5%. In worst case scenario, we're going to need like 5, unless you're doing an investment property. That's different. But you're buying your house, we're good here, right? I mean, I guess some condos, maybe 10%, but at the end of the day, it's not 20. Okay. 20 is, I don't even know where people get 20 from. I mean, I know that's the point where your mortgage insurance goes away, right? Yeah. But not for FHA anymore. So it's really only one type. So it's just, things have changed so drastically that the common public knowledge out there is just awful. It's atrocious. Yeah. People don't really know what they're talking about. But you throw this thing into the mix, and you could go from a 3 to a 6%, needed, and not including down payment. I'm sorry, closing costs.
Right.
Right. Well, so I mean, it could get expensive fast.
Do you think the overall knowledge of the general buyer is going to go up or down with this?
Oh, down. People won't understand much at all. What's funny to me is I'll ask people, hey, how much money do you have to work with for this transaction? And honestly, probably 7 or 8 out of 10 times they'll go, you mean for the down payment? Oh, yes, I do. But there's also closing costs. There's closing costs? Yeah. There's people that are working for you. You have to pay them. You're not just giving your money to the bank, right? I think that the average file touches the hands of 32 different people before it gets to closing, if I remember correctly. Yeah, but there's a lot of misunderstanding out there, so this is not going to help at all.
I mean, I think overall the buyers are going to get hurt. And by the way, Mr. Mortgage Broker, if that buyer doesn't have cash to pay an agent, Can they?
No, not in the state of Texas. Sorry, sir.
No, go ahead and talk about it.
You know, there are. Why don't I just let you finish your question first instead of interrupting you like a jerk? I'm sorry, man.
It's fine. The question is going to be where does the buyer get funds from to pay for a buyer's agent?
So what Chris was really saying was, hey, yo, I'm John Q. home buyer. I don't have enough money to pay, this guy over here, right? And so, Mr. Mortgage Lender, I need money for the house, and I need money for Chris, right? Can I do both? Well, I don't actually have the answer for that in other states. I do know that other states are much more lenient. For example, from what I understand, at the height of the crash in 2008, you could purchase a home in California with 100% financing. So that's 0% down. And then immediately the day after the closing, you could start a refinance at 105% of the value of the home. So you could take an extra 5% on top of what the home was even worth out of the house to then buy your next home. In Texas, we don't allow you to take more than 80% of your equity out of the home. So let's say in Texas, you were to put 20% down and then immediately the next day try to do a refinance. There's no money to take out. Right. You could sell it and get that other 20% back, but that's it. So in this state, no, we will not have the ability to finance and the house and finance the realtor, but also. And maybe things will change in the future, but also think about that. You're going to find I love the $1 million home because that's easy, right? 3%, $1 million, $30,000, great. Let's say you got to pay your $30,000 commission to a realtor and you're paying 8% interest over 30 years on that. So what are you actually paying your realtor?
What does $10,000 in increased home value do to your mortgage? About what?
Well, 50 raises your. It used to be $50. Now it's going to be like $70 or $80 more a month. Yeah.
So yeah, if it's 30,000, okay. Well, now you're looking at another $200 a month. Okay, maybe that's not terrible for a millionaire.
No, that disqualifies a lot of people.
Yes, it does.
A lot of people.
Yes, it does. And again, it goes back to, okay, well, where are they going to get their help? Unfortunately, my time is valuable. I can help nonprofits if I would like to work for free. That's not happening with me. It's just not happening. So, that's there's issues. There are issues that are going to happen with this. There are major
I don't know. I think with the invention of AI here in the next 5-10 years, everything will change. I mean, everything. AI is still kind of stupid right now, but just give it time. I mean, what it can do today compared to what it could do 5 years ago is astronomically different. Yeah. So, give it another 5 years and other astronomical change. And I don't think anybody's job is safe, honestly, at the end of the day. And furthermore, are we really helping? Right? Are we really helping? I think this does way more harm than help. But I'm in the industry, so I'm biased. Who knows?
Well, yeah. Well, and that goes back to yikes. Yeah, that goes back to the thing that I was going to say earlier, or I brought up. I told you I was talking to a client earlier today who used to be in mortgage, and
oh yeah, you were going to ask me about this. Go ahead. What did he say?
Yeah. So essentially, the long and short of the story is his thought was, yeah, mortgages moving forward are going to be completely different. Essentially, the company that he owns / works for is fighting for 70 basis points on a loan. Okay, and I'm sure that sounds fairly normal to you or pretty common, but
that doesn't make sense. Fighting for 70 basis points for what? 70 basis points for what?
That's their earnings on the loan, 70 bips.
Oh, so he's going to earn 70 basis. Okay, so to the layman out there, that means he's going to earn 0.7% of the loan amount. So if it's a $100,000 loan amount that he's issuing, so he's giving somebody a $100,000 loan, he'll make $700.
$70.
No, because 1% would be $1,000 of 100,000.
Oh, sorry. Ha! There you go.
It's okay. I'll stick to mortgage. We're fine. We're good.
Okay. So, but what he was saying is evidently there is a very, very large global lender, or national anyway, that has recently laid off a ton of its workforce. And the only way that he thinks that they can do that is using
AI. Yeah, AI.
And essentially, they have cut down to about 20 bips, 20 basis points, $200 per loan. And that's obviously going to make them more appealing for most people. So what do you see moving forward for lending? I'll say this, I think there's probably more work that can be done in lending using AI than in real estate right now. But
yeah,
I mean, look, no robot's going to, inspect a house. Well, shit, I shouldn't say that. How long is it going to take for a robot to inspect a house, right? So yeah, I mean, I don't know. What are your thoughts?
I think a computer could do my job better than I could.
You're not instilling confidence, man.
But name me one industry where a human could do it better
Than a computer?
In 50 years.
Oh, in 50 years from now?
Yeah. Because we've already eliminated art and music, and we haven't even really come up with AI yet. This is like baby AI.
That's a fair point.
Right. Let me put it to you this way. You've just been accused of a crime you didn't commit. Would you like to hire a lawyer and have him read one word at a time at an hourly rate, or have an AI computer scan every case that's ever been done instantly?
Wow. I guess the only outlier at that point is people that want to deal with people. But at that rate, in 50 years,
but there will be, but soon there will be, no distinguishing between an AI and a person.
Yeah, that's a fair point. So maybe as I'm looking out here, maybe an arborist.
Maybe. I think you're going to have machines that repair the machines, and I honestly, maybe spiritual guidance could be a good one. I don't know how you get a spiritual leader in a computer that can really what soul, right? However, it's a scary thought. So at the end of the day, do I think a computer could understand the hundreds and hundreds and hundreds of pages of guidelines better than I do? Capital F, yes, of course I do. Do I think a computer can emphasize better with somebody? They don't have any empathy, right? So I want a person to lead me where I need to go, right?
Personally, I do, but in 50 years, I'll be dead.
Yeah, touche, correct. I can just see this going to a place where people are obsolete in terms of helping people. And it may be looked back upon as a time when, oh my God, you did what? You carried water on your head, that kind of stuff, where it just seems obnoxious that you would have to go get somebody a Pepsi at a restaurant. Why wouldn't they just get it themselves, right? Or why the machines didn't come up and get it? It would just seem ludicrous. I think I do see a time like that.
And coincidentally, it's funny, we ate sushi at a place up closer to you called Kura, and all the sushi comes out on conveyors. And if you order something special, it zips to your table and stops at your table. It's freaking cool. It's cool. It's the Jetsons for sushi. And then
I don't know.
If you order a drink, it comes to your table on a robot.
I don't know. We're a very social species that enjoys groups, right? We enjoy belonging to groups, but we're increasingly putting the groups online and telling people to stay home. And, suicide rates really high amongst men our age, really high. We've got some serious problems out there.
We do.
So I don't know.
We do. All right. So I'm going to back it up. Anything else that I'm forgetting about with this potential NAR? Oh, the one thing that I hope happens out of this potential settlement is I absolutely hate the fact that as a realtor, I have to be a part of the National Association of Realtors. I don't think that makes any sense whatsoever. I hate sending my money to them, but I don't have a choice. So and guys, if y'all haven't heard, there are a lot of other lawsuits that are copycat lawsuits because this one in Missouri started gaining traction. So now there's lawsuits against the Austin Board of Realtors. Of course there is. At the end of the day, are they frivolous lawsuits? Yeah. If they go in front of a jury of peers, are there going to be people that say, oh, you big bad realtors, you jackasses, y'all are crooked and you're going to pay? Yeah, because that's basically what happened with the one in Missouri also. So at the end of the day, what's going to happen with the copycat lawsuits? I don't know. But I hope that what it does is make the National Association of Realtors go away, because if I wasn't associated with them in any way and they don't really give me anything other than, I guess I get like a 5% discount on rental cars.
Dude, you get more than you know.
Man,
you get more than you know.
I think Texas Association of Realtors, I do.
In 2008, they changed the rules for lenders. I think it was 2009, but from the 2008 crash, they changed the rules for lenders, and we were not united enough in our lobbyists to defend against it. The builder associations have had lots of great lobbyists, but in 2000, ish, 8-ish, 9-ish, they changed the law so that lender compensation was no longer the same. So we used to get paid like you did, right? A percentage of the loan amount. You get a percentage of the sale. But let's say I'm a
sale. I don't have to get a percentage of the sale.
Oh, fine, but we got a percentage of the sale, and sorry, I'm trying to make a point here. And what they did was they cut us off on a limit. So if you had many lenders that were specialist lenders, and it was a small group of lenders, right? But you had a lot of them that were specialist lenders that would help with, let's say, $30 million, beach homes and stuff like that, and they were getting paid, 3%, probably more like 1%. Right, of the $30 million home, right, which is a huge amount of money. We're talking $300,000 is what you're going to get paid for doing that mortgage. Now, okay, well, after the law change, they get cut off around $8,000 to $10,000.
Okay.
So instead of making your $300,000 for your rare one or two $30 million home that you might sell that 1 year, right, now you're going to make, $16,000. All of those lenders went away, and what you ended up actually having was an unfair market where the best people were gone. So then it became extremely difficult to find specialty products for wealthy people because those lenders weren't around, and they're really hard to do. They're not easy to get those loans put together. And so you try and help one person, you end up hurting another. I've seen this too many times in my life to believe that you can help everybody.
Yeah, no, and that's what I go back to about what's going to happen as a result of this. The buyers are going to be hurt by this.
The worst thing is that you've told the buyers you now should negotiate.
Yep.
Well, you already had that ability before yesterday when we all heard that the settlement happened, right? Which apparently hasn't been finalized yet. You already had that ability, but now you're going to have the arrogance of, but I don't have to pay you that. It's like, all right, well, here we go. You're going to shoot yourself in the foot. Another example of when you're going to shoot yourself. Like this all started because buyers were going to offer like 0% or 1% to a buyer, and they didn't get enough showings, like their neighbors did, who are offering 3% to the buyer's agent, right? It's like,
well, and
what do you think is going to happen?
Well, and as a listing agent, I'm going to make that very, very clear to my sellers. Like, look, we've got people that aren't offering any compensation, that are offering a flat rate, $2,000 or something like that. Do you want to sell before everybody else? Offer 3% to a buyer's agent, or offer a 3% concession so the buyer can pay their agent. Like, that's how you stand out in a crowd.
We've all heard. Go ahead.
Oh, I was going to say that's why I say I don't think a whole lot is going to change in this area, in Texas.
The whole lawsuit just is offensive when it boils down to it, because I mean, money talks. We've all heard money talks, and we're going to get upset because if you don't put the same amount of money everybody else is, you're not going to get the same showings. I mean, dude, that's supply and demand. That's 101 in business. You want to sell it faster, lower the price, right? You want more attention, offer more money to people that are. I mean, it's just unreal to me that this is even in court. But at least in Texas, right?
Well,
because it doesn't affect us.
The thing is I can see why it's in court. Like, okay, at this point, everybody's offended at everything. I get that. Okay. And everybody's looking to be able to sue somebody and get a payout so they don't ever have to work again. Okay. I get that. But laws of unintended consequences are real things. And just the way that this potential settlement is being received by NAR And what they're doing you know what? To me, I'm going to tell you how I really feel about it. Okay. NAR is showing that they never gave two shits about
The
buyers
realtors.
and sellers. No. Their NAR is showing their hand that the only thing that they've ever been is about putting money in realtors' pockets.
Mm.
And this is what I mean. If NAR had a buyer's best interest in mind, that would not be a part of the settlement. Would not be a part of the settlement. Because it doesn't take a freaking rocket scientist to figure out that this is going to hurt buyers. And again, federal government, if they allow this to go through, I mean, we have our whole damn contract is written to protect a buyer. In Texas, in the contract, there are 0 ways for a seller to get out of a contract. Every way of breaking a contract without penalty is for the buyers. And if you add in a third-party financing addendum, there's 23 different ways a buyer can get out. Everything is protecting the buyer. It's Consumer Protection Act. That's the whole friggin' point. And at this point, your damn consumers are not going to be protected. Unless, wait a minute. The rich consumers are still going to be protected if they want to be.
Well, you've just described the way the world works.
For first-time home buyers, screw you. Home buyers that have lost a business, a small business, and are trying to work their way back from foreclosure or bankruptcy, screw you.
Yeah, I mean, those people that aren't understanding this, that are like, yeah, bro, but 3%'s a lot of money. You don't need that much money.
Yeah, of course it is.
Hold on here. They prevented cash out refis for the last time as I love it. Oh, thank you, by the way, for doing that, Rusty. Glad you got that worked out. We're still at 80%, but still.
You know what?
Oh,
I don't even necessarily mind the 80. That hurts the bankers. I get that, but even at 80%, look, at the end of the day, we're protecting people that may not know any better, and a lot of that led to, the 08 crash.
Well, you know what I hate now is that if you take money out of your house, you can't do it a second time, at least not in a row.
Yeah, that's tough.
I don't care if it's been 20 years, not allowed, right?
Yeah.
So what do you mean? What do you mean? No, I didn't. Oh, I guess I did. Yeah, 20 years ago, I took $5,000 out back in the what was it 20 years ago? Back in the year 2000, right? Okay, well, you can't take any money out anymore, sir. But I paid my house down to like what? I only have 20% left of my house. I can't take anything out. Nope, you can't take a thing. What you can do is refinance your home traditionally, and then in 6 months or to a year, we'll do another cash out refinance for you.
Right.
It's the dumbest thing in the world. I can't take out a second mortgage if I've taken money out. It's the dumbest thing in the world. I really do think it's stupid. There should be.
Agree.
Okay, I made my point. I'll stop. Calm down, Steve.
Yeah, we've been going for 45 minutes. Look, oh my gosh, yeah. Let us know your comments, especially folks like Rusty who've been in the trenches and know this stuff. Would love to hear y'all's comments on this.
The dumbest. I just got to get this out. After 2008, the government got together to fix all the problems, and one of the problems that they fixed was by making FHA, the mortgage insurance on FHA, never go away for 30 years for the mass majority of people that sign up for it. Unless you put down a tremendous amount of money, you get mortgage insurance for 30 years. And by the way, if you put down, say again?
Because consumer protection.
Oh, yeah. And then for all you smart people out there that are thinking to themselves, yeah, but if you put 20% away or down, it goes away. No, it doesn't. They changed that too. If you put 80, 90% down on your FHA loan, you still get to pay for mortgage insurance for years. Right. It's which only hurts the consumer, only protects the bank. Mortgage insurance is an insurance policy you get to pay for to protect the bank against you in case you stop making your payment. Okay, thank you. Got it off my chest. Guys, pay attention to who you elect, people.
I feel like this was a great show today. Let's do it there, man. We're not always on fire like this, but you know what? You are today. My friend, I appreciate it. Guys, we do it every Monday. And yeah, if it's after the fact and you still want to leave us comments, please do. And even if you think I'm wrong, or maybe I am wrong, I could be wrong in what I've been saying. Yeah, tell me that too. Later, man.
See you later, brother.